Welcome to the next instalment of Off the Charts. American exceptionalism is a term that has been increasingly bandied around. But what does it mean exactly? Well, it's used to describe a number of different things, whether it be superior commercial acumen, superior political capital, or superior capitalist mindset. And that's just a brief version. In truth, unless you've been living under a rock for the past decade, many of you will know that economic growth in the US has been far superior to the rest of the world for some time now. The global economy has dealt with many scars over the past decade, but the US seems to bounce back faster and harder than many others. Today we ask North American equity fund manager Bimal Patel for his views on the matter. Bimal, the US economy seems to be very much alive and kicking, but what have the US been able to do that the rest of the world has struggled to do?
Yes, so in 1990, the US accounted for about 40% of G7 GDP. Right now, it's about half, so it's increased quite significantly in a relatively short period of time. When you look at what they have done, is that they've managed to outgrow Europe by about 40% and Japan by about 60%. Part of this is due to lower taxation, part of this is due to skills, having the best technology, the best universities, and being able to grow the technology sector, which has been a big driver of this. And part of this is due to having the reserve currency, the US dollar. And part of this is just geography, being a very, very large country with a large population.
Interesting. So it's clear that the economic growth story in the US is superior, and as you've stated, a number of different factors there. It's clear that no one reason seems to explain this outperformance. I think what I find interesting is that we're frequently told that stock markets are not the economy and the economy is not the stock market. Yet the outperformance of Wall Street over the past century is another fact that won't have escaped to many of our viewers. And the statistics are remarkable. The US equity market is 61% of global equity markets, not seen since the highs of the mid-1960s. And in the 20th century, the US equity market alone has produced a real dollar return of 7% versus 5% for the rest of the world. But what, in your opinion, have US companies done so well to justify their returns?
Yes, so part of this is index composition. So the US has fortunately had a significant number of growth stocks and in particular technology stocks. Those have done particularly well over the last 10 to 15 years, some even longer. When you look at what is driving those returns, even at a benchmark level, part of this is due to multiples increasing, and you can see multiples in the US now are about 24 times. So we've had significant multiple expansion over the last 15 years or so. That has driven some returns. But we've also had profitability increasing during that time period as well. So as the tech companies have done particularly well, those companies have been extremely profitable, and so the profitability of the market overall has increased, and that has given investors confidence to re-rate the overall market in the higher direction.
Great, thank you for your time today, Bimal.
Excellent, thank you.